Welcome back, investors, to Ticker Time News. I am Adam. Thank you for joining me for the After Hour Show. We're here to talk about the markets, what happened today, and what could happen tomorrow. So I've got a couple of stocks to talk about, Nike and Dave. And Dave has to do with PayPal in a way. So we'll talk about both of those companies because they both posted earnings today. So a little bit to get in on that. Now, today, the most important thing, as always, every day we do a live stream, is what's on your mind. So if you have a question, leave the ticker symbol in your question in the comments. We'll go over it during the show. So while you get your questions ready, I'll go ahead and jump right into it. All right, the stock market began the week on a shaky note, as we kind of anticipated, causing the S&P 500 to fall 0.04%. And of course, to snap its 4-day winning streak. And that, of course, lifted the benchmark to a 1-month high last week when it ended on Friday after that beautiful snapback rally right after the death cross. All right, the S&P 500 did end ahead of the NASDAQ, which was down 0.4%, and the Dow Jones was down 0.6%. The S&P 500 did flash a modest gain early on in trading. If we go and look at the 5-minute chart here on the S&P 500, we'll go on a little bit tighter here to look. So earlier this morning, right here at 9:30, we had this initial bounce here, buying, putting the S&P 500 in the green, and it lasted until about 9:40, just 10 minutes, and then the market started to sell off and fall. Now, a lot of that was because of Jay Powell and what he had to say. But it did, the S&P 500, it did flash green earlier this morning, which was actually a sell signal to collect our profits from our gains from the snapback rally, the 4-day winning streak that the S&P 500 went on. Of course, we snapped up our gains this morning and locked those in, and now we're waiting for that buy signal for the S&P 500 again. So we'll be looking for that. Now, there was some interesting pushing around here, right? The S&P 500 index, it was above its 200-day moving average, which is at 44.72. And right now, it would be this yellow line here. But if we go back to the daily chart to get a better grasp on this right here, the 200-day moving average, and it is harder to see here, but this yellow line and then this red circle right here, this red circle is when the death cross occurred last Monday on the 14th. It's when the 50-day moving average, which is a shorter term moving average, crosses down to a 200-day moving average, which is a longer term moving average, and which is going up. And when they cross, that crossing pattern is a death cross. Now, on the other way, when you're going up, you get a golden cross. But both of those are lagging indicators, meaning we are already in that trend before those signals appear. And those signals typically appear towards the end of the trend, right? So the death cross occurred, we started this back at the beginning of the year, January the 4th. The second trading day of the year is when we started our decline. And then on March 14th, 2.5 months later, that's when we finally get the death cross. So we've been in this downtrend for 2.5 months now before that signal pops up. So it's a lagging indicator. So just remember that. If you see any headlines out there talking about, oh, fear, there's a death cross, let's all panic and worry, just remember it's a lagging indicator. We've already been in the trend. Okay, so that 200-day moving average was there. We also had and of course, that 200-day moving average, 44.72. That was resistance today. And our mark right here was 44.70 is where we figured this snapback rally would come to. That's where the crossover event occurred. But even though that area served as resistance, the 50-day moving average, which is now at about 44.28, it offered a little bit of support for the S&P 500 today, and we can really see that going into the 5-minute chart here again. We can see that even though we had that brief gain and being in the green earlier this morning for about 10 minutes or so, after we started to fall, we really kind of just moved sideways, right? We got the sell signal first thing this morning, and then the market moved sideways. This purple line you see at the top here, this is going to be that resistance for the S&P 500. The 200-day moving average is at 44.72, while our line right here is at 44.70. So that's going to be resistance for the S&P 500. It's going to take a mighty big change in some direction. We don't know where. It doesn't seem like it's going to come from the Fed. The Fed is acting more hawkish, not dovish. So that's not going to help the market to rally. And of course, Russia, Ukraine, that's not going to help the market to rally. Gas prices soaring, that's not going to help the market to rally. So we don't have a lot of good things going for us right now, like we did when the death cross occurred last week. We had a lot of cash on the sidelines. The market was down. That cash flooded into the market, raising the markets right up for 4 straight big old gains, days of gains. And then there was a lot of capitalizing on that, profits taking today, and then people just kind of sitting there holding, just waiting for that next signal. Which way are we going to go now? Are we going to just move sideways, up, down? Where are we going, right? Boy, the fun of being an investor in the market and paying attention to these daily moves that the market makes. Okay, if we also look here at the RSI for the S&P 500, right now it's a bit hotter than it typically has been running in these little rallies that we've gotten throughout the year that really haven't amounted to much, except for this first one that we had at the end of January into the first 2 days of February. That was a significant rally, but we hit resistance. This rally that we had last week, it broke our resistance that we've had all year long. That's what made last week's rally so powerful. So we've got that RSI that's running a little hot right now, meaning that we could see profit taking occur, and that's probably what provided a lot of pressure on the market, keeping it down today. Money flows right now are still going up, surprisingly, even with the market slowing down today at resistance. Money flows were still going up, which is a positive sign. So we've got resistance, a negative sign. We got RSI getting hot. That's a negative sign. Money flows still being positive, which is a positive sign. So 2 negatives, a positive, and then of course all the headlines out there pressuring the market in negative directions. So we've got that going on. Now the S&P 500, it did turn negative earlier in the afternoon after, of course, like I said, Jerome Powell, Fed chairman, said that the FOMC could raise rates by more than 25 basis points, which he's hinting at a 50 basis point rate hike on one or more occasions throughout the rest of this year if needed to tame inflation. So that is a very hawkish move from the Fed, and the market doesn't like that. Okay, 6 sectors did finish today in negative territory, with the communication services down 0.7%, consumer discretionary down 0.8%. Those were showing the biggest losses, while commodity-linked energy was up 3.8%, materials up 0.9%. Those were the 2 that outperformed throughout the day. Now, energy was making a big move. Now, in the communication services sector, it was pressured by losses in almost all components. Almost every stock that is listed in there was down today. Meta Platforms was down 2.3%. More headaches for them after a Russian court charged the company with, get this, extremism. Facebook extremism. That's what a Russia court said. And of course, the Russia court then banned access to Facebook and Instagram from the entire country of Russia. Now, in the discretionary sector, Home Depot was down 3.3%. It pulled back after recording 5 consecutive gains amid a bit of profit taking there. Now, I do think Home Depot does have some positive pressure on it, pushing it in the upwards direction after today's profit taking occurred. All right, we have Nike today also down 0.8% on the day, which snapped a 4-day win streak for Nike, but they have regained those losses after releasing their quarterly results, and more on that in just a moment. Now, on the upside, the energy sector, it totally outperformed throughout the day thanks to strong support from crude oil, which climbed 7% to $110.21 a barrel amid continued speculation about the EU banning Russia oil imports. Will that happen? We'll have to wait and see. Now, steel names contributed to strength in the materials sector after Australia banned exports of aluminum to Russia. Nucor, ticker symbol NUE, was up 4.8%. It rallied to a fresh record high, while fertilizer stocks also outperformed, notably with CF Industries, ticker symbol CF, up 6.4%, reaching a new record high too. Pretty cool. Now, in other corporate news, and this one's not a good one, Boeing, ticker symbol BA, was down 3.6%. I'm surprised it didn't end the day down more after a 737 jet manufactured by Boeing crashed in southern China, killing all 132 occupants on board. Not very good. Okay. Treasuries, they retreated throughout the day, sending the 10-year yield higher by 17 basis points to 2.32%, a level not seen since May of 2019. Man, they are just ratcheting up, aren't they? Is that yield curve going to flatten and invert? If it does, that doesn't signal a very positive future ahead for GDP. Okay, the market tomorrow, there is no economic data. I'll put it that way. There's no economic data reported tomorrow, which should help to keep markets stable, unless, of course, we get headlines and that drives tomorrow's movement, as headlines have been a major contributor to how the market's been moving. Now, here's where we stand year to date. The Dow Jones is down 4.9% year to date. The S&P 500 down 6.4% year to date. The Russell 2000 down 8% year to date. And the NASDAQ down 11.6% year to date. Okay, let's look at Nike. NKE is the ticker symbol for Nike. They posted their earnings after the bell today. And you can see they were down that 0.8% I mentioned earlier, but they are now up 6.38% in the after hours, just running right now. They are above their resistance channel. Right now, the stock is trading right about at its 50-day moving average. I don't want that red because they're in the green, so let's make it green. All right, that's where Nike is trading at right now. They are outside that channel that they have been in all year long. That's very positive, but they are still below their 50-day moving average, which is this lighter blue line that is coming down from the top left down to the bottom right of the screen. If they could get above that 50-day moving average, that would be a very positive sign. Now, their earnings Q3, and they posted 87 cents per share gain from their earnings, which was 15 cents better than expected on revenues of $10.9 billion, a 4.8% year-over-year gain. Not too bad from Nike. Now, Nike direct sales were $4.6 billion, up 15%. Nike brand digital sales were up 19%, led by a 33% growth in North America. That was really cool too. Now, gross margin increased 100 basis points to 46.6%, driven by margin expansion in Nike's direct business, which was driven by lower markdowns. So there weren't that many shoes on sale and marked down. Nike's got to pass those inflationary pressures onto their consumers. So not too many markdowns there for Nike. Also, what also helped margins was changes in foreign currency exchange rates. The dollar was a little bit stronger, and a higher mix of full price sales. Again, that goes right back to the first point, that there weren't as many discounts on their products, which all of that helped to offset and have their margins increase. Now, we could also talk about freight and logistics costs. They were up for Nike, and man, we just hear that from everybody right now. Inventories for Nike were $7.7 billion, and that was up 15% compared to a year ago. So Nike's got more products due to our supply chain issues, and more products sitting in the back of freight containers, on trains, ships, trucks, wherever. They've got shoes sitting out there that need to make it to their final destinations and get sold, right? And most of that was driven by in-transit inventories. Lead times extended because they got the supply stuck on these container ships, right? So those supply disruptions, Nike sees those going on throughout the year. And of course, that was partially offset. There was a very strong consumer demand during this quarter for Nike. So that helped that when a product reached the shelf, customers were buying it right away without any discount. So those are some of the important things that came out of Nike's earnings after the bell today. And of course, they are up here in the after hours over 6% and kind of hanging out using that 50-day moving average as resistance, which is a positive move in the after hours, but still remaining under that 50-day moving average, that acting as resistance. That's still negative pressure, I would say, on the stock itself. But RSI has shot up over the past 5 sessions, money flows, everything, right? But this was a pretty decent report from Nike, and investors are being rewarded. Now, I've got a new company that I want to talk about. This is a little company that I found due to research about PayPal. PayPal, I have been on board with for a while, and I have said the stock was oversold. When it was at $200 a share, when it dipped below that, man, I thought the selling pressure went too far for PayPal. So I've started to do a ton of research digging into what's going on with PayPal. Why is it so, in my opinion, oversold? And really, it doesn't take that much digging to figure it out. Look at this. This is a company called Dave, D-A-V-E, Dave, Banking for Humans, right? And this little company, small little company, is one of the biggest reasons to why PayPal is suffering. Hear me out. This Dave company, they posted earnings today. And if we just take a quick peek here at their earnings, this was their fourth quarter and fiscal year 21 financial results. Now, during the quarter, they lost 15 cents per share. They had revenue of $41.2 million, which grew 16% year over year. Dave added 440,000 net new customers. That is right here as one of their highlights, bringing their total to 6 million total members. They have here 1.51 million monthly transacting members. That's good, right? They also have 4.5 transactions per monthly transacting member. That's also a good metric for the quarter. Now, Dave has here GAAP operating revenue net of $41.2 million compared to $35.5 million in the fourth quarter of 2020. Non-GAAP operating revenues of $44.2 million compared to $36.5 million in the fourth quarter of 2020. So they have a lot of good going for them. And if we look at the fiscal year 21 highlights, GAAP operating revenue net of $153 million compared to $121.8 million in 2020. Not a huge improvement there from a year ago, but it is an improvement. And what I'm seeing here, and here, fiscal year 22 outlook, this is also important. Their fiscal year 22 non-GAAP operating revenue between $200 and $230 million and non-GAAP profit margin of 44 to 48%. That's what they have here for the upcoming year. Now, Dave, it's not a humongous company, right? It's not like PayPal or Square or Block, but it's a little financial fintech company that is taking 440,000 net new members. There are sprinkled all throughout companies like this, little fintech companies just like Dave here, who are making an impact in what's happening with PayPal. Let's look at Dave's stock chart here. The ticker symbol is their name, Dave. And it hasn't been public for very long, so we can see that, right? Going back here to December 30th of 2021. Looks like it was a SPAC deal, right? Well, had a quick sell-off, a quick rally, quick sell-off, moving sideways. And then since March the 8th, it's been rallying. Even today, up 4.8%. Now, in the after hours, it is down 1.6% to $10.43 a share. On March the 8th, it closed at $4.36 a share, up 6.8%. Okay? And then they had an 18.3% day, a 7.5% day, a 4.5% day, a 10.8% rally, a 4% rally, and a 10.9% rally, a 7.2% rally, a 27% rally, and then a 4.8% rally. This thing has been on fire. Now, where are the PayPal investors going but right here to Dave to get 169% return on their investment since March the 8th? And let me measure this as accurately as possible. 162% gain over a 13-day period. This is where PayPal's investors are going. They are looking for these smaller fintechs that have better growth prospects, possibly, than PayPal. who is a mature, stable, for the most part, fintech themselves. So, from my research, people are finding these smaller fintechs, these smaller growth companies, and they're betting on them to get a bigger return than a return on PayPal. If we go to PayPal, PYPL is the ticker for PayPal, and we go to March the 8th, okay? I'm going to get my ruler out here. I'm going to go to March the 8th, which was right here, okay? And I'm going to measure from March the 8th to where we are right now, and that's actually a 20.9, call it 21% gain. A 21% gain in PayPal from March the 8th till today, and today was a red day, down 3.4% for PayPal. And then you go look at smaller fintech companies like Dave, up over 160 some percent during the same time period. Which would you rather be investing in? A smaller growth fintech or a larger, more established fintech? 160 plus percent growth or 21% growth? That's where investors are going for these smaller fintech companies. Now, Dave also had some other good news that they reported from their earnings report today. And that is Dave announced a strategic partnership with West Realm Shire Services, owner and operator of FTX US, whereby the companies will work together to expand the digital assets ecosystem. That's right, cryptocurrencies is what we're talking about. FTX Ventures, which is a $2 billion venture fund, has also invested, as you can see from the headline here, $100 million in Dave. With this investment, Dave has significantly enhanced its balance sheet with additional resources to expedite its growth strategy and invest in future initiatives, including those crypto related. FTX US will serve as the company's cryptocurrency, introduce digital asset payments into Dave's platform. That's the biggest news here. Crypto is coming to Dave's platform. And that's what you can see with going back to Dave's stock chart here over PayPal, DAVE. Get Dave back on the screen here. And we've got a $10 stock versus a $115 stock in PayPal, growing much rapidly. Cryptocurrencies are coming to Dave's platform in the near future with a $100 million investment with FTX Ventures. So this speaks nothing but great news for Dave. Now, Dave is a little volatile. Today, Dave did get as high as $12.35 and then closed at $10.60. You can see the needle here went sky high on Dave, and actually, if we included that from March the 8th, right, and we go all the way to that high of today, and we sold at the most perfect point, that was over a 200% rally in Dave since March the 8th. Of course, nobody can time the tops and bottoms perfectly, but that was a very big noticeable top, especially when you're looking at the relative strength index, and it's way up here at 80.3 on the RSI. You've got the money flow index. The money flows are at a 96.8. The number only goes as high as 100. Hello? If you are trading this, then you would know when it gets to a 96.8 that it's time to jump ship. It's time to collect your profits and lock them in. Over 200% gains since March the 8th. So I'm not recommending buying Dave at this moment because it is stretched, and we can see that by the profit taking that occurred today from its high. If we look at the 5-minute chart for today, you'll see that clear as day where it went way up. I mean, look at this. Look at this. Way up, right? Way up. And then we come back in here to today. And I only want today on here. I don't want yesterday, Friday, excuse me, on here. All right, there we go. Today, right here when they opened at 9:30. Where are we? Where's 9? There we go. 9:30 opened on a green. We had a little bit of a rally going up to the high of today of $12.30. And then we had a sell-off. And then there was a little rally at the end before another sell-off and ending right about where the lows were. A few pennies higher. Let's see, 10.13 going to 10.60. Not too bad. Oh, and look at this. Dave is up 1.2% now in the after hours. So this is a company that is just, man, I wanted to know where PayPal investors were going. And through my research, I find all of these smaller fintech companies like Dave out there who are just grabbing investors' attention and giving them a solid rally. All right, that's what I wanted to discuss there about Dave right quick. It is a very interesting story. And of course, the stock chart, man, that really tells it for Dave there. Okay, I want to talk about tomorrow right quick because there's two companies that I have to mention for tomorrow. The first one is Lululemon, ticker symbol LULU. Now, the reason, if you watched yesterday's Catalyst Watch video, you know why I'm bringing Lululemon up for tomorrow. Lululemon will formally enter the footwear industry with its first ever running shoe hitting the market. Lululemon's shoe lineup will compete directly with Adidas, Nike, and New Balance. So Lululemon hasn't been performing all that well. Over our rally that we just had over the past 5 sessions, I should say 4, because today wasn't a green day by any means. But it wasn't that big of a rally. It didn't even get back to its own highs that were made back here on the 2nd and 3rd of March. Its 50-day moving average really put a lid on it today, whereas on the S&P 500, the 50-day moving average acted as support. And if we look here, earnings are just 8 days away for Lululemon, not that far. So with them entering the shoe market today, that was announced a while ago. I'm sorry, entering the shoe market tomorrow officially. That was already announced a while ago, but the stock has definitely been underperforming here this year, like everything, right? Nothing's been doing too good unless you look at Dave. My goodness. All right, the next one that I want to mention for tomorrow is a company that I love, that I own, Tesla. TSLA is the ticker symbol. Why Tesla for tomorrow? Well, Tesla was green today, up 1.7%, up 0.2% in after hours. It is trying to get back up there. It is on a very strong winning streak right now, 5 sessions in a row of green. But tomorrow, Tesla is expected to begin deliveries from its new Gigafactory Berlin in Germany. And of course, that's going to be celebrated with another event at the plant. Now, Tesla stock, like I said, it's run up sharply. It has busted through some key levels, especially today. Today was a very important level. The 50-day moving average, Tesla is above it. Tesla closed above it today, and that is a bullish sign from Tesla. So, congratulations, Tesla. You're doing all right. And with the new Gigafactory Berlin expected to open tomorrow, I believe Elon Musk is already there. I think I saw headlines of him flying in to Germany to celebrate Tesla's huge accomplishment, getting Gigafactory Berlin up and running. So great job, Tesla and team. The stock is performing right now in a very positive way. Breaking above and closing above was very important for Tesla today. That's a very positive signal. Also, if we go back and look at these highs that were made here on March the 2nd and March the 3rd, being up above that and closing above that level is a bullish signal. See, that's something that a lot of investors either don't know, haven't learned yet. But when a stock is in a downtrend, right? Whenever that stock, and let me get the pen out here, whenever that stock starts to rally, right? It starts to go. What you want to see is, first off, the first kicker is you want to see the stock close above where the previous day's high was, right? Tesla did that on this first block here, okay? It did it on this first block. Now, the next signal, the next candle here, they closed above that previous day's high as well, going back 2 days, right? And then that third day right here, they broke above where this candle sits. 3 green, 3 red in reverse, getting higher and higher and higher each time. And then finally on Friday, that fourth candle, they closed well above these previous highs right here. This is a very bullish sign for Tesla. Closing above these previous day highs is very important. And then today, breaking above that 50-day moving average and closing above it is another very positive and bullish sign. So just a couple of little items there that I want to point out for Tesla on the chart there. Those, each candle, they have meanings, and that's a little bit of what they mean. Okay, those are the two companies that I'm watching tomorrow. Tesla is, its RSI is a bit stretched right now. It's at a 59.9, call it 60. It's above where it has been over the past couple of weeks. So that's one thing to watch out. Money flows, even though we've been in a rally over the past 2 sessions, the money flow has flattened out. So we don't have as much inflows going in as we would like to see to keep this rally going. We could get a rally tomorrow because there'll be a lot of positive headlines for Tesla tomorrow because of the Berlin factory being opened. And hopefully it would be cool to see a car. I don't know if it'll roll off production tomorrow or not, but that would be very cool. At least to see cars starting to be made would be incredible too. So watch out for Tesla headlines tomorrow about Gigafactory Berlin, and that'll be exciting. All right, everybody. Thank you so very much for joining me. That's all I wanted to talk about today. I'm here every day. The market is open at 5:30 p.m. and we're here for your questions. Whatever question it may be, we'll look at it together and figure it out. If I don't have the exact answer, we'll research it and look for it. So thank you guys again for joining me today. I greatly appreciate it. If you did find value in this video, if this video was helpful, actionable, then click that like button, take the URL, share it wherever you can, and click the first link in the description to beat the market with us. All right, ladies and gentlemen, thank you so very much for being with me today. I greatly appreciate it. Happy investing, and I'll see you in the next video.